Welcome back, episode 24, Pickers Market.
Welcome back.
Welcome
We're
back.
coming back.
Yeah. Since Jeremy had to go with naming our episodes, I figured I should follow suit. So we're going with the Kobe episode, which I know Jeremy's disappointed.
Where you got a boo button thing on there?
I thought you were gonna say like Jeff Gordon or something. Wasn't he 24?
Is Jeff Gordon? Yeah, that's exactly right.
I think that's about all I got.
Yeah, no.
Why?
Internally, it's the Ricky Henderson episode. It's just gonna be. It's just gonna be internally. Whatever. In my own mind, that's what it will be. The other one that you know who doesn't get talked about as much anymore because his career kind of ended not so great was Ken Griffey Jr. Like he was a 24.
Was he really?
Really?
Yeah.
Oh,
guess I forgot about that.
There you go.
Baseball.
I got things.
Baseball. Twin.
Ooh, yeah, that's bad news.
Anyways, so we are now a week past the Fed decision. We just want to recap it really quick. We obviously were on here last week calling for 25. They ended up nailed it. They went 50. My take on that is I don't think it really matters if they did 25 or 50 last meeting, to be honest. I think the more important part is where do they end the year, right? Because now we're pricing in, the market's pricing in another 50 and then 25. But according to Powell last week, they're going to slow that pace and be more in line with the 25 and 25. So I think whether they did 25, 50, 25 or 50 basis points, 25, 25, like I don't think it really matters. Mm-hmm. That's my initial thought on that. But yes, we were wrong on the 25. I don't know if you guys have any other thoughts on that.
Yeah, no, we were wrong. I was worried that 50 basis points would be taken by the market, that the economy is really slowing down and that would impact the stocks. But I think they did a fairly good job of kind of massaging that before it came out. And Paul did a good job on his commentary of laying out why he did 50 and not kind of saying the economy is really falling apart. That's why we're doing 50. So I think the market took a little bit of comfort in that, and it's acted well so far, which does a little bit surprise me. But I think you're ultimately right. I think it's the end game is where we're going and direction we started. And I really don't want to see too many more 50 basis point cuts, because I think if we see 50 basis point cuts, I think that means there are some things wrong with the economy.
Yeah. Predictions, whatever. They're fun to do, but they're not that impactful. Like, we were wrong, right? We were all wrong. That's okay. It's not like we were betting the farm on whether it was 25 or 50, right? We don't have options trades going, well, if it's 50, we're going to lose all of our money. And if it's 25, we're going to massively win. Predictions of those types of events for me are just, I don't know. They're fun parlor games, but they don't really do a whole heck of a lot. Yeah. So from my side, I think the trajectory, I wish we could just stop talking about them so much, to be honest with you. We always use that like 3-bar of what we pay attention to in the fundamentals. I don't remember the Fed being one of those bubbles that we talk about so much, but we seem to be talking about a lot, which again, it is important and it's important to understand, but man, I just wish we were talking about stocks and economies again and that kind of stuff and getting away from, I always want to be a little bit careful of, the driving force of our stock market is one person at the top of it always makes me just a little nervous. It gives me kind of the ick factor from that. I don't think it should be the case.
Yeah. I mean, to your point of, does that 50 basis points to 25 change how you manage your portfolio?
Not one bit.
And the same here. So it didn't really change our stocks. I mean, we weren't set up like some massive bet that we had to have 25 or nothing, and 50 is bad. So
Tyler, your stuff, if they're more aggressive than you think they're going to be, you'll probably be the most.
It's more impactful on the fixed income side. But again, like if I'm still expecting a full 1% in 2024 in interest rate cuts, a 50, 25, and 25 still gets me there.
Right.
Like
same path. Same end result.
It's not going to matter. So the other thing that I consider is where is their predicted finishing point or terminal rate? Because that'll tell you where like the 10-year treasury typically will sit, and you can play your portfolio on that. Mm-hmm. But so I guess what I'm getting at there is, if the Fed decides to go 50-50 and do a bunch of 50s and they go below what they're expecting to do of terminal rate of 2.8%, then it's going to have a major impact on how I'm positioning my portfolio. Sure. But for them to do 50 and then 25s and maybe cut pause towards the end of the cycle, it doesn't matter.
Gotcha.
So, and again, fixed income markets move ahead of the Fed, right? So everything is already.
Yeah, interest rates went up, right? I mean, 2-year and 10-year treasuries
10
went
years
up.
going up. Yep.
It did. The 2-year went up slightly too, right?
I can go on my soapbox about that one because I've been, we won't do that one today.
Save that peach.
Yeah. All right. Well, I'll stop my rant there before I get too heated on that. The other thing that we've got going starting today, Elite Advisor Forum. We talked about it last week, and I just wanted to bring up this and just your guys' thoughts on this. We talked about the speakers that we're excited for, but also it's a time for us to really build relationships with advisors that work with us, that we partner with, right? And for me, thinking back, like when I first started at Gradient, that was really how I got to know some of our advisors, right? Like, especially for Lisa and David being a little bit newer on the team, this is the time where they can actually put faces to names with the advisors and vice versa for the advisors that they work with.
Yeah.
So, I know we talk about the speakers and getting excited about that, but I think for me, this is also exciting just to have advisors in-house, not in-house, but in town.
That's the fun part for me.
Yeah.
To be honest with you, putting the lineup together and getting everything, it can be a little stressful, right? But if I get to just hang with some of the advisors I like to hang out with and chat up and hey, what's going on in your business? What's going on? How can we help more? That kind of stuff. To be honest with you, that will have a more lasting impact because we listen to the people that we have up on stage. We listen to them all the time, right? We're always paying attention to that.
Brian was on CNBC yesterday.
Exactly.
Or Monday.
Yeah. And we get his notes and we all, and we read them.
Yeah.
We don't get to do that as much with the advisors. So I like to sit with them and, chat them up a little bit, just see how life is going in general, but also just to kind of get a sense of, hey, how can we help them more? That from our side, I get more from that in these conversations than I do almost the rest of the year.
Yeah, well said, Junior. I agree. I mean, Tyler and I started about the same time, so it's when you start, it's great to meet all these people and put a face to their name. But now it's like you have these relationships. It's like still continue to build on those and kind of what's their concerns, what are your clients hearing, what are we talk pretty often, but am I missing something? What do we need to do? That type of thing. So it's good to meet them.
Well, and for me too, like you go to Gala in the summers, you go to Summit in January. This is really my only event where I get to like have that interaction, which is great. So. That's what I'm excited for. Anyways, moving on. Markets, all-time highs. As I was thinking about this topic, the market was down yesterday, and then we had a nice little rally towards the end.
Your content was saved.
So I'm a little. I was basing it more on Monday's close, so we've officially hit 41 new all-time highs this year.
Okay.
So I think there's a pretty big stigma with investing at all-time highs. Would you guys agree with that? People don't want to, like, if
general investors' perception. Yes.
If you said, go invest your portfolio tomorrow, but we're at all-time highs on the S&P, people are going to be pretty hesitant. I would say.
Yeah, because the mantra is buy low, sell high, right? So that's, I think, goes counterintuitive to that just investing mantra. So
but you always have to set highs to get to where we are today, right? So there's constantly
you're not breaking highs, you're not growing.
Yeah. So, I think that's a pretty challenging part of investing is trying to break that stigma. But yeah, we did officially hit 41 all-time highs this year. So is there anything on your guys' radar right now where you think it could derail this momentum in the market that we're seeing?
Sure. Lots of things.
But there's always a lot of things.
Yeah.
Right. There's always noise. So is there something in that noise that you're specifically paying attention to?
No, because what could really derail it is the thing you didn't see. Right. Sure. I mean, if we could predict every negative event, then we'd be pretty darn good, and we're not that good. I think we're pretty good, but I don't think we can predict every negative event in the economy and the markets. And that's what usually creates the negative event, right? Could we have an oil price shock because something happened out there and then the economy shrinks because now everything's super, super expensive? Absolutely. That could for certain happen. And just, we've got 2 active wars going on right now, right? I mean, there's those kinds of things. So there's a lot of stuff
we're not
out
active in them.
Well, a global event is happening. The world the world is having them. So from that side, those are the kinds of things that can trigger those types of events that can be problematic, right? Those are the things I worry a lot more about than the things I can see, right? Is that, a lot of people talk about like government debt and those kinds of things. It's a problem, but that is not an instant problem, right? That is your kids and maybe your grandkids issue, which we have to solve. There's real issues there, but I don't worry about that like derailing the economy.
The market can forecast. People are forecasting the debt out to
2050
already, right?
Like, it's not like it massively changed. It's not like, unless the politicians decide to go in default, there's no reason for the U.S. economy to default. There's just no reason for it. So from that side, I don't worry as much about that. I worry more about those exogenous events that I can't see coming.
Sure.
Yeah, the one event that would do that would be the oil shock. I think
that's the biggest one.
That's the one that I kind of like. No one talks about it. I guess you and I just talked about it, so it probably won't happen. But that's the one that I think could hit us from nowhere. Other than that, what's going to continue to keep the stock market going higher, I think, is earnings growth.
Yeah,
we talked about that in the last several episodes. That's ultimately the driver of the market right now. Last 2 quarters have been really good, been a little bit better than expectations. Earnings growth for next year, what everybody's starting to look forward to, 2025, the S&P 500 is supposed to grow 14%. That's a big hefty number. And if we grow 14%, markets are fine. They'll certainly grind higher, I think. But, if that number 14 is more like 8, 9, 10, still okay. You go below that, I think is where the problem would come. I think that's the easy thing to point to that could change the dynamic of the market is earnings don't come in, and which we're about a month from that, and we'll start talking about those as well.
Yeah. I mean, on the earnings side, especially, if 14 goes to 10, I don't really see that as a disaster. But if 14 goes to 5, especially where we are from a valuation perspective, that's a problem.
Yeah. I think from the valuation perspective, with the S&P being at 22 times, all of a sudden, if that growth rate comes down, you probably get valuation compression on top of that, right? So rather than being 22 times, you probably come down to maybe the market pushes it down to 21 to 20,
18, 19. If you start slowing earnings growth,
slower growth, you put a lower valuation on typically, right? So
we do on companies all the time. Why wouldn't we do it on the general market?
Anyways, but you guys have been, so going back to this thing about all-time highs, because I find it fascinating just about how we always say buy low, sell high.
Mm-hmm.
But if market's always hitting all-time highs, like the amount of all-time highs that we hit, I don't have the stat in front of me, but it's a lot, right? Do you guys have been in the business for a long time. So do you guys personally invest at all-time highs? Or do you wait for some type of pullback?
I guess I can start. I have a little bit more of a growth background, so it's a little easier for me, and just because I've been trained just to buy growth things generally, they keep always, but there's periods where they rise and valuation gets stretched. So if you're worried about valuation, you miss out some massive runs. So that being said, I will buy all-time highs. Obviously the market, and you didn't throw it, is markets are up 75% of the time, year over year. So it's 3/4 of the time markets are going to be rising. So you can't be afraid to buy the overall market. That being said, some of the individual stocks, if they're breaking out, setting new all-time highs for, earnings acceleration, whatever the reason may be, I'd like to see a little bit of a pullback. I mean, the pullback could be 1-2%, right? I mean,
Is that really going to matter?
Yeah. So that's what I mean. For longer term, if I'm looking out a year, if I'm buying at all-time highs, it's sometimes you do it if you can make a sense, right? If it, fundamentals look like they're accelerating, revenue growth, valuation, it's like, okay, maybe you can grow into that, make that valuation go down a little bit. So being a growth guy, I probably have a little less sensitive of buying breakouts or all-time highs. Jeremy?
Wow, that was a lot. Here's a thought. I'm an investor. I invest personally, right? I'm not selling everything as soon as we break all-time high. I'm going to lose money a lot if I do that. So yes, I am personally invested. When I talk about individual stocks, I do have some problems buying at all-time highs. It's a personal thing from my perspective. Individual stocks and saying, I don't own this position now, I'm going to buy that stock now at all-time highs. If it's extended away, valuations extended, all that stuff, I'm probably not buying it. It's just kind of how I operate. But I don't sell everything either, right? It's not like, I have let many of our stocks go to all-time highs and above all-time highs, and I haven't moved one iota.
Mm-hmm.
I won't sell that position. I'll hold on to it and see where it goes. But new buys, I tend to look for opportunities in a little different fashion. I want a little cheaper valuation. I want something that's a little out of favor right now. Hopefully I get, it reaccelerates and I get a little valuation upside from it. That's how I outperform. So what I'm looking for when I'm looking for new names all-time highs are probably not the thing I'm looking for. But when I'm investing, it's not like I'm selling because it is an all-time high. No chance.
Yeah. I think for me, like in my personal investing world, I honestly don't really care. I look more at valuation and do I like the story of the stock? And if like I'm trying to hold these names for,
long time,
right? Yep. I got a long time horizon, hopefully. So if it's at all-time highs, I really don't care.
Would you buy a new position on
yes.
that? Yeah. Okay.
Yeah. I mean, one recently that I bought was, this was probably 3 or 4 months ago, was Welltower.
Got it.
Right.
Yep.
And that was at all-time highs and it kept going higher.
Yep.
I just like the story behind it. Old senior housing, right? Or senior communities.
Yep.
I just like the story. Anyways, so I do it in my personal account from like a portfolio perspective. I try not to as often, unless if, like you guys said, if it makes sense and the story's there and valuation isn't extended, then I'll do it. But if valuation is extended, like in the G40I, if valuation for a stock is extended, I'm not going to just step into it and hope earnings continue to go and valuation stays there.
Yeah.
So,
yeah. For me, I mean, all-time highs aren't an automatic exclusion, but it's going to have a higher hurdle rate to get in. There better be a story that tells me something that either this is going to continue to accelerate and therefore the stock is going to continue to work, or some other thing that I see. It's not something that I automatically say, well, all-time highs, I can't buy it. It's all-time highs. Okay. Is there enough that tells me that there's still juice there? It's just, I can't think of an example I've bought at an all-time high in recent times.
Yeah, no. So again, I do it, but you're always a little more nervous when you're buying stocks that are setting all-time highs.
You just got to remember that, the hurdle rate is higher, right? You got to jump a little higher.
Yeah. So. All right. One curveball for you guys on this. So yesterday we got news of China doing a big stimulus package. So in your opinion, China in the past has been has had a pretty big impact on U.S. markets, right? How strong their growth has been, and the global nature of the companies in the S&P 500 or the U.S. stock market, large caps in general, it's just so intertwined, or has been. It seems like COVID maybe changed that a little bit, but do you guys think China has as big of an impact today as it did previously?
I can answer very, very quickly, and then you can throw it.
Sure.
No, I don't think it's anywhere near what it used to be. I don't think COVID slightly changed it. I think COVID broke that.
Yeah.
We've decoupled aggressively. China does not stimulate to the extent of buying or, the building components where they're basically building things to nowhere. They've kind of exhausted that. So now it's, how are Chinese consumers doing? And that affects significantly a small amount of companies. It does not affect the broad U.S. economy to the near extent that it used to. Supply chains have adjusted. I think COVID decoupled that quite a bit. And I think my evidence is just that China's economy has been pretty terrible, and the S&P 500's at all-time highs. I wish I could say more than that.
No, I 100% agree with just what you said. I mean, the U.S. market's been climbing higher. We're growing. There was time, if you go back 5-6 years ago, that they said the Chinese economy would be bigger than the U.S. economy.
Yeah, it didn't work out so well.
It didn't work out so well, right? I mean, that's when their growth rates were high single digits, double digits, and they're not that anymore. They're back to actually U.S. or even below in a couple of years. So I think that's good for their economy. It's probably good for some large cap companies that still sell over to China, but certainly not the impact it had 5-8 years ago.
Sure. So this big stimulus package isn't going to be this big tailwind for U.S. stock. Obviously, Chinese stocks might do better based on that, but for U.S. stocks,
no, I think a handful of companies that have China exposure will do very well if this stimulus package stimulates the Chinese consumer. I think that's much more now. I think industrial oriented, just it doesn't factor in as aggressively anymore.
That's where it used to impact,
almost
our HVAC companies, our building supplies, all the stuff like that, the controllers, this and that, which now I think it's more tied to their consumer. They're talking about their property, markets cutting rates there that help stimulate that, which I don't think will have as big an impact as.
I don't think so.
Yeah.
And what are your thoughts on it?
Yeah, I think it's as much as our U.S. stock market is globalized, I don't think China's going to have a big impact. I think there are a few names that could have a big impact. I think Nike, Starbucks are probably
those are probably your poster children. Yeah.
The two most prominent ones that could have a positive tailwind from this. But I think from like a Amazon or Apple or Google, I guess Apple, you could probably throw Apple in there with how much iPhone sales they do over in China. But your typical household names outside of those three probably don't benefit a whole lot.
Well, you mentioned HVAC. HVAC companies have been going absolutely insane just upon U.S. infrastructure changes, AI needs for those kinds of data centers and that kind of stuff. There's been there's been different events outside of China that have caused those companies to be phenomenal out in a time when China's been pretty bad.
Yep.
Yeah. Well, and we're already 3 years into this onshoring, nearshoring cycle. And I think it's not like China doing this stimulus package and, it doesn't have that impact like it used to because we're moving a lot of our stuff outside of China anyways.
Let's put it this way. I kind of hope it works because, the consumer company, if their consumer can be a tailwind for some of the companies that we invest in, great.
Yeah.
I always worry about if that economy, especially, and this is kind of getting a little geopolitical here, so I apologize, but if that economy gets worse and worse and worse, what do they do as a result of that? Is there actions that they take, that could cause more global events? That's why, so I kind of hope it works. Their economy doesn't have to supersede ours, but them being at least somewhat successful kind of could maybe equal the ballast a little bit and having them not do desperate actions, which would probably be the bad move.
Yeah. Well, I think we're seeing a little bit of reversal from it today too. Like I own JD.com and the G40i and it's down like 4% today.
Okay. But it was up big yesterday, right?
Yeah, it was. Yes.
To be fair.
But you're just I don't think it's going to have I think people are a bit skeptical of the stimulus package, but all right. So transitioning here to a wait what. So Keith kind of brought this up on Monday, and it is interesting. So Microsoft did a deal with Constellation Energy to reopen 3 Mile Island. It's not Microsoft specifically buying 3 Mile Island nuclear power plant, but their deal was for Constellation Energy to provide power directly to Microsoft to power their data centers. And in order to do that, they had to reopen 3 Mile Island nuclear power plant to do so. And I find it interesting because we've been on this journey since, I guess, 2010, maybe longer, of trying to shut down all of these nuclear power plants.
Yeah, I think that's actually 80s, I think.
Well,
been longer than that.
Yeah. Okay. Well, scratch that.
Tyler's historical reference only goes so far back.
Well, I mean, it's when 3
He's
Mile
like, was Friends on? That's all I got.
It was when 3 Mile Island. That was, I think, 70.
That was kind of the catalyst for them to start shutting these.
Got it, because that was 1979,
and they're extraordinarily expensive to operate, especially historically.
Yeah. So since 2012, we've closed 12 nuclear power plants or shut them down, with 7 more scheduled by 2025. So do you guys think that's actually going to happen now that AI requires so much energy and power?
The reason we were talking about the other day, I just fascinated that, the whole conversation for the last year and a half has been about AI and, obviously the power side of things, and it takes a lot of power, and that could be eventually the bottleneck that slows down AI. The chips are getting fast enough. Maybe it is the power. And we were kind of chuckling, many episodes ago that, utilities are a play on AI, which I still don't necessarily think. Some of them maybe a little bit, but the fact that Microsoft, a technology company, is going to make a deal with a closed down nuclear plant constantly to get them up and running, to get enough power to power their AI. It's like, wow, that's just kind of a little bit mind boggling to me. I think it's like, wow, they're actually putting real dollars to work to something that has been in the shutdown mode, like you said.
Yeah.
I think we have 54 nuclear plants here in the U.S. and
soon to be 55.
Soon to be 55. But that's a 2028 event, right? So it's like, okay, the Constellation, the stock that 3 Mile Island runs, actually popped on that news. But it's just if AI is that important to the world, the U.S. economy, that where we're going to get all this power from, and this is a long tail thing. So that's why I just thought was interesting.
Yeah, I mean, So nuclear is actually nobody wants it in their backyard, right?
No,
so
that's the problem.
good luck firing this thing back. Good luck firing a bunch of these back up.
We have 2 in Minnesota, and I actually have one that's probably not too far from all of our backyards in Monticello, which is probably about
close enough to where if something happened, we'd all be in trouble.
We're all in trouble.
Yeah. Nobody wants this stuff in their backyard, but yet, I mean, from a power efficiency perspective, once you get it going, now it's extraordinarily expensive now to get them lit up. But once you light those things up, they're extraordinarily efficient. So they work really well. The problem is, 3 Mile Island. The only thing we knew about that before this news came out was nobody wanted to live near there, right?
Well, wasn't the stat from the one down in, I think it was Arizona, provides enough, one power plant provides enough energy for 4 million
houses. Yeah, it's like 4 or 5 gigs.
Nuclear energy is, if we were just to say, starting from scratch, what do we want to do, and we don't worry about meltdowns, tough to not worry about that. But if we don't worry about that, nuclear energy is probably by far the most efficient energy we can produce.
Well, I feel like it's also probably gotten, as far as, I know we're not building new ones, but the ability to monitor and the containment zones, or containment, I don't know what do you call containment shells, I guess. I feel like it's probably gotten a little bit more sophisticated, or at least on how to.
I hope so.
Right? Versus 1979, right?
For sure, the technology and just the monitoring capabilities. Yeah. But that being said, you hear about hacks. We had the CrowdStrike Microsoft thing. Can you imagine all of a sudden something like that gets hacked? Right?
Yeah.
I mean,
that's that's the thing, is you can make a disaster movie out of it, right? And so anytime you can make a disaster movie, you're not going to make it one out of a wind farm, right? There's no killer wind farms that are going to come at you.
Can.
I suppose those things spiking through cars or something like that, you can maybe do.
Comes off the rails and starts rolling down the highway.
But I mean, I watched Chernobyl on HBO and all that stuff. I mean, it was highly entertaining and pretty darn sad. But from that perspective, it's like that's what people envision. No matter how safe it is, it's like, this could happen to me. I ain't doing that. Yeah. So that's the harder part with nuclear, is just getting it beyond that element. I think you're absolutely right. I think it's much safer than it used to be. I think the building codes and all the other stuff, you're absolutely right. You'd have to insulate it from hacks in some way, shape, or form. I don't know how you do it. The problem is I think you can come up with so many reasons not to do it that maybe are irrational, but still there, that I don't see them firing up a bunch of these things anymore.
Well, okay. Last 2 questions on this. One, do you think it's worth the trade-off? Adding these or firing these back up, or not shutting them down completely to power AI? Is it worth the trade-off versus the potential risks?
To power AI, or just in general?
Just in general.
Okay.
Right. I mean, AI.
2 different answers for me, but yeah.
AI is obviously the main reason why people are probably looking at these a little bit differently now, as far as shutting them down.
Sure.
Is it worth the trade-off? And then, will these deals become more common?
I'll start and go quick. Is it worth it for AI? No, because I think we're overreacting to power to a certain extent, in my opinion. I think horsepower, it's, again, we're in this pie in the sky time right now, right? At some point we get more efficient and we get more useful. And I don't think power is going to be the biggest source of why we would fire up nuclear plants for AI. Would I do it? Is it worth the trade-off in general energy? I think it actually is. But again, you have to get people over a very, very, very high hurdle, in that nobody wants them in their backyard. To build them now is just difficult to do. So I think nuclear should be part of our power infrastructure. Whether it's for AI, I don't really care. Whatever we need it for, I think it should be there.
Yeah, no, I actually agree 100% with what you just said. Actually, Sam Altman, the OpenAI kind of founder, he was in front of, I think, Congress yesterday talking about a nuclear plants as well. They're talking about a 5 gigawatt plan, which, again, that would power about 3 million households. That they want to build a big data center. Like, well, where are we going to do that? And supposedly they not just want to do one, they want to do 5 to 7 of those. So think about that. That's just yesterday's news. So it's real, the power consumption. So I think Jeremy's right. I think ultimately we find different ways, or they're more efficient, that they're not going to, because you just can't have, that's, say 5, 7 times 4 million household. That's 28 million right households that you
can't put that on the grid.
You can't put that on the grid, right? That's my point. You just shut everything down. So I'd leave it at that we need to find other alternatives, whether it's wind and solar and some other
things. I think
like
all
that.
of them are
natural
elements.
gas. I think is a.
I think every one of them should be at least considered. And what's the most production we can get off of that for the least cost?
Yep.
Right. And infuse them all.
Sure. All right. Last one, Spaghetti Walt. baseball is almost in October, which is my favorite time to watch baseball because it's the only time that I watch baseball. Would you disagree? There's no way you watch baseball outside of October.
I used to have
Bally Sports. Sorry, I'm gonna even call them out by name. Bally Sports has ruined baseball for me. They stopped showing the Twins games. They hijacked everyone and went bankrupt. Thanks, guys. Good job. So that ended it for me from that side. I used to be a pretty frequent watcher actually during the year, and I'll still throw on an ESPN game every now and then. But baseball is much more of a localized sport at this point right now. You follow your own team, and that's kind of it.
Yep.
And the fact that I can't watch the Twins drives me nuts.
Well, okay. So maybe you don't want to watch the Twins.
With the meltdown.
So on October 17th, the Twins had a 92% chance of making the playoffs. October 17th. Since then, they've gone 11-22 in their 33 games. They have 6 games left, and they're basically a coin flip away from actually making the playoffs.
I think it's lower than that as of yesterday.
Oh, really?
Yeah, they lost again.
Oh,
they did?
Yeah.
All right, so check 11-23. Do you think the Twins can squeak out in the last 5 games, somehow making to the playoffs?
I'm a Minnesota guy for a long time, like we've known. So absolutely not. They won't make it.
That is a true Minnesota guy right there. Well, it seems to be a race to the bottom because it's not like Kansas City and Detroit are doing anything. They're losing just as much as we are.
Yeah.
So could the Twins just stumble in accidentally? Sure, they're not going to make any noise in the playoffs.
They're not going to not going to win out their last 5 games and get some momentum into the playoffs.
No, because they were not this. The early part of the year where we were doing really well. That was the fever dream. This is actually the Twins cut payroll, and they didn't have a whole heck of a lot of payroll to begin with. They cut payroll at the beginning of the year. We're not that talented. This is probably worse than reality, but somewhere in the middle is where we were a 500 team. I think that's where we should have been. We were a little ahead of pace in that, and we've given all that back here lately.
So Tyler, if the Twins don't make it, will you still watch October baseball?
Yeah, I do love watching October baseball, and I think part of baseball for me, and we've talked about this before, is nobody's there usually. And so there's just like no atmosphere. Even watching on the TV, you just don't hear anything. But then you get into playoffs and the place is packed. Someone hits a home run. You can hear the crowd go nuts. Like that's actually enjoyable for me to watch. So I will watch it.
Yeah. I watch a little bit, not a ton though. I mean, used to be all sports Minnesota, all super fan, but again, Minnesota just kind of wears you down, and the Twins, it's frustrating. If they would have if they make the playoffs, I'll watch more. If they don't, I'll watch maybe a game here or two, but it doesn't do a whole lot for me anymore.
Yeah,
I'll be in.
I know Jeremy will.
I'm watching.
Yep,
super fan.
All right. Well, if you guys think the Twins can make it to the playoffs, leave a comment in the comment section.
Give something for Gangl to smile about. Guys just dour over here.
All right. Well, you guys have a great rest of your day.
Go Vikings. How about Skull?
There you go.
3-0.
We'll end it on that.
So we'll end it on that. So have a great day, and we'll see you guys next time.